Hello, my friends. Brett Pattison coming at you from the financial capital of the West Salt Lake City, Utah. Joined by the big fella. No, you're the tall fella.
Not the big fella, not the husky guy.
He wouldn't like you calling him husky.
No, he does. He does. He likes being called husky.
Okay, well, we're with the tall fella from Logan today.
Yep.
Spencer Nelson. Great to see you, Spencer.
Great to be here, Brett.
Brian is on a hiatus, a well-deserved hiatus. We miss him.
Kinda.
Okay.
We do miss him. I'm supposed to be closer.
So, Spencer, as we start the new year, Happy New Year, by the way.
Happy New Year. Happy New Year, everyone.
Yes,
Clients,
2022,
listeners.
looking forward to a great year where COVID disappears.
It's going to be great. I don't know if it's going to disappear, Brett. I'll be honest.
From
with
our
you.
minds.
Well,
You know what's interesting? The market believes it's gone.
oh yeah, the market is priced in past COVID. The market has gotten very immune. Can we use that word? I don't know. To COVID, not immune.
The market took the vaccine.
They,
Or did it have immunity from having COVID before?
No, the market has decided that they've gotten numb. That's the word. The market is numb to COVID right now.
Well, Happy New Year, everybody. I think there's two things on people's minds, Spencer, as we start this new year. I don't think COVID is one of them. Right? With Omicron and the Delta variant in Q4, we saw some good sell-offs, but they were quick. And they were based out of fear, and then people realized, hey, the Omicron is not really a big deal. Market shoots up to new highs again. 2011 actually, was it 2011? 2021, where am I? 2021 was actually a really solid year, and that's what I want to talk about to set up one of the things that's on people's mind. And the second one, well, let's just mention them. The first thing that's on people's mind is, what's the market going to do? Because you know what? It's gone up too far, too fast. It can't keep going higher. The second thing is, hey, what's happening in the circus tent that is Washington, D.C.? So those are the two things that we want to talk about today. First off, let's recap 2021. The market finished up 27%. At one point, the market was down 5% during the year.
Biggest pullback of the year was 5%. That is not normal. Average is 13%.
14%.
Right? 14%.
Yep.
So a lot less volatile year to the downside, 2021. And part of that, I think, we discussed it because of the large pullback in 2020.
2020, the market, we had a bear market. And
Yeah.
people forget that. But the market was down at 1.37% in 2020 because of the COVID lockdowns. So we're coming off of a bear market, but still the market finished up 27%. At a low, it was down 5%. Again, and Spencer alluded to it, the average decline in a year is 14%. So here's what's happened the last 5 years, Spencer, as far as returns go for the S&P 500. 21%, down 4.8%, up 31.5%, up 18.4%, and then up 27%. So people are saying, with that kind of streak, which is about 18, close to 19% annually for the past 5 years, that can't keep happening. What would you tell them? What's the market going to do, number one, and to the notion that it can't keep going higher?
Yeah, our clients are, I say it all the time to people that I talk to on the phone. No one knows. The reality is no one knows. But history has shown over the last 90 years, it can. It can keep going higher and higher and higher and higher. And there's a number of reasons, inflation and yada, 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 earnings growth and population growth and, whatever it is you want to point to, there's a million variables there. But people who, when the market hit all-time highs, 10 years ago, 3 years ago, 4 years ago, whenever it was, it can't keep going higher. Well, you may be right, no one knows for sure, but history says it can keep going higher. Now, does that mean, it won't go down first before it goes higher? No, yeah. I mean, the market might go down 5% before it goes higher, but then history tells us that it will go higher at some point. But the reality is, no one knows what that path is, what that chart is. Ray Dalio was on CNBC the other day, and they were talking about market timing, and he just laughed about it. And it's a fool's errand.
So what you're saying is you don't know what the market's going to do.
Wow, that was, Brett said it in 3 seconds. I said it in like a minute.
So, but you're right. You're 100% right. It could go higher. It could go lower. Nobody knows. Here's what people need to prepare for, right? Because there's a lot of fear. I'm talking to people that aren't clients right now, and some clients, and they have some cash, and they're saying we don't want to invest with the market at all-time highs. So, and I kind of understand why, because there's fear that it can't go higher, especially after a 5-year run where we've averaged 18.6% per year.
Yeah, well, I'll speak personally a little bit. I'd probably be a little hesitant of putting it into the market in general, like the entire market, and that leads to why we do what we do. We don't invest in the entire market. We don't just throw money and invest in 500 and 600, 700 companies. Not that that's a bad strategy, but I'd be a little hesitant to do that right now with the market at all-time highs. Mm-hmm. But what we try to explain to clients, and I'm sure you're going in this direction, is we're not buying the market, we're buying a business, and we're buying individual businesses. And just because the market's at all-time highs, maybe some of the businesses that we want to buy are, and we won't buy those businesses right now. But there are other businesses that aren't trading at all-time highs that still can be a good deal and a good value, and we do want to go buy those businesses right now.
That's the key, is when we invest new money for clients or for brand new clients, we're not worried about necessarily the market. We're keeping our eye on it, but we don't watch it. We don't as regularly as the businesses that we want to buy.
Yeah, and I'll say this, we don't base decisions generally solely on where the market is. Like, it is a variable that we're aware of, and we have to be aware of it, but it does not dictate if we're going to go buy an individual business because the market is at a certain place.
That's the key. So what should people know with new money that hasn't been put to work? Well, with Iron Gate, there's 3 or 4 businesses that we really like right now that are trading for a really good price. We would buy those businesses. Then we would probably hold some cash for maybe a correction, maybe just one stock getting hit that we can buy that business that we love. If you don't have a process for putting this money to work and investing, then you're running blind. And that's, I think, what creates fear in people's mind is they don't have a process, or they don't understand our process fully, or maybe they just need to be reminded of the process that we have.
Yeah, and we all need to be reminded of the process because, and we've talked about this on previous podcasts, there is a lot of emotion involved with all of it. And so that's where the process and the discipline comes into place. Hey, these companies, these individual businesses are in a price that we feel comfortable buying them, we'll buy them. These aren't, we're gonna sit in cash and we're gonna wait until the market pulls back completely, or just those individual names come back completely. We've had both scenarios occur, and that's when we're ready to jump on them. But in terms of the market in general, is it going to go higher? Is it going to go lower this year? Nobody knows. Everyone can make educated guesses and have ideas. Nobody knows for sure, and we aren't even going to try to play the game of knowing, but we are going to buy businesses that we find good value in.
Amen, brother. This is what people should plan for psychologically, though. Okay? Plan for, because it's on average, this is what happens. Plan for about a 14-15% correction at some point. That might be starting right now. I mean, the NASDAQ's down about 4% on the year. Could be happening right now. It could happen when the market's up another 20%, that we see that. But at some point, you have to prepare on an annual basis for a 14-15% correction, because that's average.
Well, and let me, because someone, I've talked with clients before, especially new clients that aren't as familiar with the stock market, and they would hear that and they'd say, well, why don't you just wait for that then, Brett? If you're pretty confident that it's going to pull back, why don't you just wait for that? Why don't you do that, Brett?
Yeah, because here's what happens. That's a great question. Because average doesn't happen a lot. And here's what I mean by that. Here's the last, I don't know, I'll go back 5-6 years. The low point in a given year, meaning the market is down, intra-year lows. In last year we were down at 1.5%. The year before, 37%. 7% before that, 20% below, 3%, 11%, 12%, 7%, 6%. Those are the intra-year lows. Did you hear at any one point 14 to 15%?
No, not at all.
Could be a little less, could be a little bit more.
Yeah.
That's what makes it so hard.
Well, and in addition to that, it's kind of like what Ray Dalio said, trying to time the market. Nobody has any idea. So it seems so commonsensical, hey, just wait for the pullback, and then by then, well, nobody knows what the pullback is. Yep. And so that's why not trying to time the market or base any decisions on that, but ultimately valuing businesses is the strategy that we found, and we found it works.
Yep, and then trade around it with options, which is also very fun.
Yeah.
Here's what Peter Lynch said, and I love this, is just a reminder for people. Far more money has been lost by people preparing for corrections or trying to anticipate corrections than has been lost in the corrections themselves. So keep that in mind, folks, and know that we have a process, and if we're managing your money, hey, trust that this process, well, it's worked since 1999 and even before that. I mean, this process wasn't created by us. It's been around forever. So that's the first thing we wanted to talk about, which we're getting questions from clients. The second thing, Spencer, and I'm going to lean on you because I believe in our firm, you're the Washington D.C. expert.
Oh, is that a compliment?
You're our politician.
Is that a compliment?
I'm not going to answer that question, but here's what's on people's minds. Build back whatever. That's what I'm going to call it. The build back whatever. Is it going to pass? Is it not? And taxes. What's going to happen to our taxes? Play probabilities here for me.
Yeah.
Based on your knowledge.
So we all know that the Build Back Better deal fell through at the end of the year. They weren't able to push it through.
Manchin stepped in and said, hey,
can't do it.
Along with 50 others.
Can't do it. Inflation and spending and for a number of other reasons. But said I can't do it. So it's getting punted. And I think probabilities would tell you that some version of the bill will pass this year. But it is going to be a very watered down version of what they were trying to get through at the end of 2021. What does that mean? It means it probably increases some government spending, but not nearly to the tune of what was in the original bill. Does it mean tax rates go up? Probably. Probably, in the original bill, tax rates for people over $400,000 were going to go up a couple percent. I could see that happening. Capital gains taxes. The threat was going all the way up to earned income tax rates, which would put it at 40% for the top tier. I would say probabilities tell us that there could be a 5% raise in capital gains, potentially. That's the side of, if it passes, that's what I would expect to see. The challenge is the midterm election. Mm-hmm. It's very difficult to raise taxes in a midterm election year. So you have a number of Democrats in the House and in the Senate that are sitting there saying, I have to go for re-election this year. Do I want to be raising people's taxes and taking a little more out of their wallet? Which a lot of them don't. So I don't know if there's the political will. I know there will be the political will to spend because people like spending and it puts more money into it.
Here's the thing with spending. It's both sides.
Oh yeah, for sure.
Both sides. It drives me nuts.
No, the Republicans nor the Democrats have shown a desire, a will to be fiscally responsible over the last 20 years. It just hasn't been there.
Especially the last 3 or 4 with COVID and everything else.
Yeah, and so I think the spending part of it goes through. I think there's probably a little lower probability that the taxes, but I would not be surprised if taxes do go up minimally. But I don't think it's the doom and gloom everyone was worried about it going into after the election or anything like that. I think it's a minimal tax increase.
So here's what people are thinking then. Is this something that we should take action on now? Meaning I've got these large gains. If capital gains is gonna go up, should I sell something now? Or is this these potential tax rate hikes going to happen in 23 or go retroactive for 22?
Great question. I think a lot of it has to do with how early they do push something through. If it can get done in February, March, April, there's a chance that they'll make it for 2022. But if it gets pushed out back further than that, then I think it goes to 2023. Should someone be proactively doing anything right now based on supposition? No. In my mind, as a financial advisor, it would be much wiser to see how it plays out.
To wait.
To wait until it's not like you've got a whole year to figure it out. I wouldn't force anything right now.
Don't make any decisions right now.
I wouldn't unless you
Based
have to.
on the unknown.
Yeah,
Yep.
based on the unknown.
Unless you're forced to. So you know what this does bring up though, if something goes through, it brings up more spending, which brings, and this is kind of a third topic, although I'm not getting the question as much, but it brings inflation again to the forefront. We've talked about inflation many times. It's 6.8%, which is the most it's been since the Carter administration. In 20 seconds or less, ooh, that's gonna be tough.
I got it.
How do clients defeat inflation?
Own great assets.
Like?
Businesses for us is what we would say. Own great businesses that have pricing power and low capital expenditures, meaning that they don't have to output a whole bunch of money in order to create products, and that the pricing power they can raise as inflation goes up. There are those types of businesses. I've had that conversation with many clients. We feel like our portfolio is positioned really well to be able to absorb that.
Because who knows how long inflation will be around.
Exactly.
You did that well. It wasn't 20 seconds, but you did good.
18 seconds.
The other asset would be real estate and renting, a rental on a real estate, which also has the pricing power.
Absolutely. Great real estate, not peripheral real estate, good real estate. Same thing with companies, not just any company, the right real estate.
Great businesses.
Yeah.
Yep. All right, my friends. It's already been a fun start to 2022. We're seeing really quick for those clients that keep an eye on their portfolio, we're seeing a rotation happen right now. Last year's laggards are becoming quickly this year's leaders. And no, that's how a portfolio works. If one stock lags for 1 or 2 years and you're sick of it, hold on, because there's gonna come a time where it becomes a leader. And we have stocks in our portfolio that kind of lagged, but this year they're up 7, 8, 10, 12%
Already. And that's part of constructing a portfolio. I mean, the type of businesses you own, and you don't chase. Don't chase buses, don't chase dates, and don't chase stocks, because another one's coming around every 15 minutes.
You can chase chickens.
You could chase a
Good
chicken.
exercise.
Yeah.
Right. So what's the market going to do? Who knows, right? Stay the course, follow the process. We talked about the upcoming policy in D.C. and what to do and what not to do, which is really just wait to see what happens. And inflation. You know what to do. All right, my friends. Spencer, great to see you.
Happy 2022, brother.
Hey, right back at you. Until next time, bye-bye.